Hey guys, I'm looking at Netflix as a play into earnings. So Netflix has earnings on Tuesday, January 19th, and you could see it's going to be after the bell. Um, so I'm looking to make a play going into earnings on January, right before earnings. Um, I'm looking at the implied value. So I'm looking at earnings, just the week leading into earnings, which in this case is January 15th. So the market makers are playing for 40. They're expecting 46 points in either direction, and I only need 70% of that, which is basically 32 points. So if I'm playing for another 32 points, I'm really playing for 566, and meanwhile they're paying for 570, 580, right? They're playing for 580, and I only need 32 points. I need 566. So I'm playing for just under the 100. So I'm going to use this as my body. I'm going to use this I'm going to target the 100, which is just a little bit out of the 70% I want, but let's just let's use it as a base. So why did I choose Netflix? I want to show you what they do going into earnings. Here's the last. This is a weekly chart. You see they're in a squeeze. And the reason I picked the weekly chart is because I'm looking at this as a play going into January 15th. You can see on a daily chart, they have really been running, cooled off a little bit. Um, Sellers try to take some of the profits, but the buyers said no. They're already in acceleration stage, so you got upward momentum. Sold off, try to sell off a little bit at the end of the day based on the 30, but that last candle said nope, and they even entered into a squeeze on a 30-minute. So when I look at this on a weekly, just look at what the earnings run has been. Nice movement into earnings. Then it sells off, so you don't want to hold it too long. The quarter prior to that, nice movement into earnings. Right, and these are weekly, so even here, nice movement into earnings. Right, so we're in a squeeze. They've already started a momentum, and I'm thinking we're going to continue to run up here somewhere. So here's the trade I'm going to structure. We're looking at the 15th. I'm looking at doing an iron butterfly. So I'm going to target the 575 as my body, which is just, basically the 100, right? So I'm going to target that. And I'm saying that if for whatever reason it moves away from that, I will still profit going in up to 600. If for whatever reason it doesn't get to the 575, but they get to 550, I will make money there as well, right? Because you can see I'm selling a call at 575. I'm buying, and then I'm selling a call here at 575. I'm selling the put here at 575. So here's the upward movement up to the 600. Here's the downward movement up to the 550. Um, that will collect 2100 in a perfect world. I'll collect 2100. Let me show you what that trade looks like. Let's analyze it. So I get into the trade now, and I hold it. Let's just say I'm going to hold it 1 day before expiration. Um, this is what the trade can do, right? This is saying that if for whatever reason on the 20 on the 15th it ends at 575, that's like hitting the jackpot. You can make 50,000. I doubt very seriously it's going to end here, so I'll take any of this. Conversely, if it ends below my smaller wing 550, this is the kind of loss that I can have. You can see the kind of loss you can have. Same thing here. You can have loss, and you can see it in this box here. So this, and we are going big game hunting here, right? Um, so that's the trade I'm proposing. This is saying that it's only risking $1,900 in capital. All right, 'cause that's the I'm sorry, the most that I can lose is, yeah, it's 1,900. That's the capital I'm risking to possibly make $10,000 on this trade. So that's my recommendation. I want to risk $1,900 in capital with the mindset of potentially collecting up to $10,000 with doing 5 of these contracts. Okay. Let me know if you have any questions. Thank you.